Hello, hello, everyone. Let's rock and roll. It is Quick Start Lab number 6. Is that right, Corey?
Yeah, number 6.
Welcome,
6 of 8.
Welcome, everyone. Welcome, Corey. Welcome. Let's do a sound check. If you can hear me, give me a little raise of the hand. And you see, you guys are way ahead of me. Axel Gravings, I can't say that right. It's moving around so much. Axel Gravings Brayton. That's a cool name. Gravings Brayton. Gravings Bratton? I don't know. Gravings Brayton? I don't know. You guys are awesome. I got all these hands up. I'll put your hands down. 1, 2, 3. Boom. Welcome, welcome. Corey, welcome. How are you?
Doing fantastic. Excited to be here.
Fine day. I tell you, I think there's a couple cities around the world that I've seen coronavirus starting to peak in, and that just fills me with energy because I'm like, hey, the economic thing we got a long ways to go with, but at least our health stuff, hopefully we can get on the other side of that. The last one was a good pronunciation. Gravingsbratton? I don't know. I'll keep working on it, Axel. But when your name is Axel, that's just toughness, okay? That just sounds like someone who's tough. Like you could totally count on Axel to do the thing. Like if you needed help, are you going to call Andy? No. You going to call Corey? No, because our ends kind of end with a Y, like a puppy dog. That's what you name your puppy dog.
That's right.
But if you need help, call Axel. He'll just come over and take care of business. That's
no
it.
doubt.
Marianne says, I'm sold. There you go. I'm in. Very cool. Hey, great job. We've got a power-packed, awesome... This is going to be insane today. You guys are going to love this one. We're going to dedicate the whole time to dealing with the risk. We know that this trade is made up of two. On this side we have the bull put spread, and on this side we have the bear.
Andy, it's not showing your screen.
It's not showing
yet.
my screen. Well, I'll just hit the button. Maybe that'll show it.
There you go.
So down here we've got the bull put spread, and up here we have the bear call spread, and we've put them together. We have this iron condor. Oh, before we do that, we got to do this, though. Disclaimer. We never skip it. I got so excited, I almost skipped it. That'd be like the third time in history is all. 3 things. We're not giving advice. We don't use this example, say go out and do it. We're teaching from this live example. So this is for educational purposes only. And that's a big challenge because when you look at the 97.44% we have success, a $62 gain, $400 probably won't put anyone in bankruptcy, but we still keep it on paper to learn. And we don't, jack up these contracts too big. And so we use these examples to illustrate. We don't make any warranties. I was talking to my attorney this morning on a different matter, and I was just mentioning him. I says, it's really important for people to, keep it on paper. And he loves the idea that we don't, like if you look at all our testimonials, I never show money ones. I always show, hey, Corey is handsome, or Corey has a good personality or a sense of humor, and that seems to do better than these crazy claims of $10,000 in one day or something silly like that. This stuff is risky, and that is our theme. We're going to spend all our time in the 4th pillar today, managing risk. We've done a lot of fundamental analysis. We've done charts and technical analysis. We've done cash flow right here. But how many of you guys would be pumped just by raise a hand here to dedicate an entire session to risk management, how to manage we got hands up. We love the risk management. Everyone gets excited about the cash flow, but if you get excited about risk management, just as cool as the tricks and tips, like Corey and I were talking yesterday about last session, and everyone's comments, like when we show the iron condor and how cool it is, and like, wow, that's genius, that's amazing, how can everybody do it? Well, hopefully you'll have the same experience today with risk management. Yeah, it's a little complex with risk management. It's just a little more intermediate level trade, but we're going to do a good job for you guys. So this involves risk. We're going to look to lock it down today. And one more order of business. Last time we did the question thing, where I have everyone write as many questions as they can, and then I cut it off. And we kind of got down, and we almost got the last 2 from Ryan and Sean, and we ran out of time because Corey had another meeting. We went a little long. We went like 2 hours last time, so we'll try to shorten that up for you guys. But here's the thing. Would I buy EOG stock or just take the trade? And I don't know. I think this went through. I think we got filled on EOG. If I remember right, we did. And, this one's kind of cool. This one went up. This one might be one maybe next week we can look at, because now we got a 23% chance it might get over the hump here. About a 76% chance we could be in trouble here. So I haven't actually looked at this today.
And he might be asking about adding the bull put spread on the other side to do an iron condor.
Well,
because
yeah,
the stock itself, the stock would be a hedge, and maybe that's what he was talking about. Is we could buy the stock to hedge, which we'll talk about today. But all of these that we've been showing so far they do not include the stock. So like GLD, pure options trade, and SPY and EOG, they're all option trades to this point. The stock can come into play for hedging.
And let me take this, by answering this question with a question, and let's everyone answer this question for Ryan, not just me and Corey. Let's have everyone answer it. Okay, let's think about what this trade is. We're working and practicing on our vocabulary, okay? So usually we start off, when we name a trade, we start off with the direction. So based on what you guys see here, we'll just type some of this stuff in if I can get a hold of that and move it. It's based on what you guys see right here. Let's get our pen going so we can draw on the board here. Yeah, I like that. Direction. Is this a bullish trade or a bearish trade? Let's see what everyone has to say about that. See, you guys already got the whole name of it. Look at this. Half of you got the name of it all the way through. Look at this. So yeah, this is a bear. Very good. Half of you already did the whole thing, and that's fine. That's fine. Okay, are we using puts or calls? Let's see. I got to scroll down now because you guys answer so fast and awesome. So we're using puts or calls. Let's take a look before you answer too fast. Looks like here we are exclusively using calls right here. So we have a bear, call. Okay, now let's look at the math on it. Let's look at the math. Looks like we brought in 60 cents right here, because that's the one we sold. So we brought in 60 cents. Remember, the seller gets the money. But then we bought one for protection, right, Corey? Corey, you're better at the math than I am on that. What's 60 minus 33? What is that, 27?
So 27, yeah.
So is that a credit or a debit? What do you guys think? Let's have you guys answer that one in. Oh, this would be a credit. You guys are fantastic. Credit. And we're spreading this out between two of them. So this is a spread. We got two options here. I got to use colors. We have them, just well use them. Spread. Spread. I'll get that right. Spread. Bear call credit spread. Now, some people just call this a bear call spread because they know it's a credit. Some people just call it a call spread, and probably credit spread. But the full official long-winded name is a bear call credit spread. So here's the so now that we know the answer to that.
A good question came in real quick, Andy, on how you can identify whether it's a bull or a bear spread from that risk graph. And the easy way is to look at that turquoise line and look at where you're in the profits or where you're in the losses. You'll notice that it drops down, that turquoise or bluish line drops down on the right. So all those high prices are in the negatives. Over on the left, you can see the negative value. We're losing 100, we're losing 200, and so on. And up top, we're above zero or making our money all the way along the left if it's at lower prices. So, of course, we want it to be low. That's how we get above zero into a profit. If it goes really high, that's where we drop down and it starts to become a loss. So,
now,
good.
That's a great insight, Corey, that we see that the prices are going down. We're really in good shape here on 4/18/20 or 4/18/20 in 10 days from now. We're going to be in pretty sweet shape right here. Ooh, I'm excited because we've got another week where we can follow this through. Dude, this is going to work perfect, Corey, because this is going to climb. We're going to have to do on this what we teach today next week. I almost guarantee it. That would be so awesome. So as this goes down, bearish is good, bullish would be bad, which leads to your ability now to answer Ryan's question. Would you want to buy EOG stock in this instance? Would you want to buy it in this instance? I mean, we basically think it's going which direction? Down, or we wouldn't have put this on. Now, we might be wrong, and hopefully we are. But would you want to buy a stock that you felt was going down? See, someone says, let it expire. That's right. Siddharth P. Raj says, let it expire. Yeah, don't buy that. Yeah, don't buy that thing. So it's kind of cool that what hopefully you're learning is some of you are saying, man, I had no idea you could make money this way on stocks that go down. And what's really cool is I'll tell you what's cool about call spreads, and I'll just show you. This is why they're attractive, is because of probability, and then we'll hop into delta hedging. Oh, no, we got one more question to ask. We got another question to ask. Are all ETFs European style? No, so that's easy. No, some of them you can take delivery on. Okay, watch this. Here is a stock called ABC, and it's sitting here at $100 a share, let's say, $100 a share. All right, is it going up or down? Is it going up or down? Tell the truth. The answer is I have no idea. Get used to saying that. It's okay. Yeah, who knows? I love that in great big letters from Christopher Pearson Smith. Who knows? I don't know. It's all right not to know. In fact, it's funny because when you watch CNBC, what do they all say? Oh, I know what it's going to do. And they fight, right? Well, I think it's going up. Well, I think it's going down. Well, no. And they argue as if they knew. And the answer is on CNBC, they don't know either. They don't know. Someone says, Andy knows. I don't know. I really don't. I don't know if it's going to go up or down or sideways, but let's say that the chart looks like this. Okay, this has been the chart, okay, for the past year. And let's say that this right here is 110 and this right here is 90, okay? Now, would you say this, though? Would it be easier to predict a direction, up or down, or who would say it's probably not going to go to $2,000 a share and it's probably not going to go bankrupt? Who'd be okay in saying that that's likely? That I don't know what direction it'll go. I'm not very confident in what direction it'll go, but I'm pretty confident that it will be somewhere within this range. And so there's two types of bets that you can make. You can say, well, I bet, you can get on CNBC and you can say, well, I bet it's going up. And then you can be the other guy on CNBC who says, well, I bet it's going down. Or you can be the person that says, you know what, I don't really know if it's going up or down, but I would feel confident of saying it's going to be somewhere in this range. And that is a game changer for people when they realize that they can bet on a range. It's not a perfect thing, but right here, all I'm saying is, look, I don't know. I really don't know if this is going to go up or down next week. When we meet next week, it could be down here, it could be up here. But I'll tell you what, there's only about a 22% chance that it'll be up in here next week. And there's going to be about a 77% chance it's here. And, we've had a bit of a rally in our market right here, a bit of a rally, and I don't know, we're starting to run into maybe a little resistance right here, maybe even a little resistance right here today, and this thing might take a breather. We'll see if it does. I don't know if coronavirus is over and if this was short-lived tragedy, but I'll tell you what, I hope it is. I hope it's short-lived, and here's why. That means you guys got a get-out-of-jail-free card. And this is what I mean. Without coronavirus, let me just see. How many of you would have probably not got into today's class without the worry of coronavirus? Let's just see that. So how many feel like the coronavirus and the craziness kind of helped you get going in this class? Let's just see. Yep. Some people say, nope, I'd have done it anyway. Yep, for me, yeah, maybe, definitely, probably would have. Okay, so this is a huge deal. Do you think that coronavirus is the last time we're going to have anything that could cause a market crash? Do you think that coronavirus is the only thing that could cause us to have a market crash? Oh, like, how about this? Maybe the fact that we have $125 trillion we owe off balance sheet in the U.S. Oh, maybe the fact that we've got negative interest rates in Europe. Maybe the fact that Japan, those of you guys in Japan, has lost their mind. They have a 250 GDP, debt to GDP ratio. Oh, yeah, listen, shut your mouth, Andy. Do you think there's other things, or that we just passed $2 trillion? Okay. Someone said, you know what? Michael Wheeler says, future of the economy is pretty uncertain, right? You guys are already shouting out pillars. Look at that, Corey, Philip, pillars, right? And so this is a huge deal that I hope we get out of jail free, and you guys have plenty of time to keep practicing and learning. But who is darn sure that you're going to be ready for the next big drop. And it could happen next week. I mean, we're not out of the woods yet by any means, but these are life skills, not coronavirus skills, right? And that's a huge thing. Tonya Davis, I will confirm. I will give you absolute confirmation that you're being seen right here. I can do that. I can't, when we got 100 million people, it's hard to shout out everybody, so I apologize if I don't get your name. But with those big capital letters right there, boom, I will give you absolute confirmation that my comments are being seen. There you are, Tonya Davis. We see you. Hello. So we're doing our best. So with that, we have this idea of trading in a range, GLD. And this trade's turning out pretty darn nice, isn't it? Whoop, let's go back to GLD. Was that on this one, maybe? And here we are sitting here, 97% chance we'll be successful in this trade. $62 reward on $400 of risk. That's a ridiculous ROI for, however many days we've been in this. And this is going to expire in 10 days. So this is looking good. So with that, Corey, where would you rank delta hedging on your list of cool stuff as a strategy to learn for this stuff?
Yeah, I'd put it up there. It might be number one. It might be number one in risk management because it comes into play often, especially with these types of cash flow strategies. I mean, it is your bread and butter adjustment. There are other strategies where maybe delta hedging wouldn't be, but this is definitely one where it comes into play.
In fact, what we'll probably do is, this couldn't actually worked out any better, is we might just use that EOG. We might even do one today. If not, we'll do it next week. It's not quite deep enough to where I'm panicked, but we'll act like we're panicking. I mean, we're still way on this side of what we call the theta switch, but we'll kind of act like we're panicking even though we're not. I mean, look, you got a little bit of standard deviation that has moved up in here that can make this thing go nasty. So hopefully it does go nasty so we can experience it and delta hedge it, but we'll see how it goes. So,
and this is one where, remember that last time, had we added, and I don't remember how that put spread ended up. Like we were looking at this for the iron condor, and then maybe it didn't get filled or whatever. Yep. But had we added that,
would have been awesome.
It actually would have helped our trade because we'd have brought in an additional credit. And if it moves up, well, it means our put spread down there that we could have added would be in even better shape. It would be highly, highly probable to be successful. And we don't have it in this case, and we just left the bear call, which is fine, no problems. We're now sitting at 45 per share. If I remember right, the last couple of times we met, and when we put this on, it was around 40 to 41 per share. So you can see how that stock has started gravitating up here from 40 to 45, and our spread where we don't want it to be is at 50 to 52.50. So if I were to ask you, is it likely to be above 50 next Friday? What would all of you say? Is it likely?
Yeah, that's a good question. How many think it's likely that it will be above, what'd you say, 50?
50, because that's the trade, right? That's the one that we're short the 50 calls, and we bought the 52.50s for protection. Okay, so not likely. When we talk about likely, if you were just saying 50-50 chance,
more or less,
more or less, it's less likely, right? It's not supposed to be there because it's at 45 right now, and if we look at that in terms of probability and so on, it's only a 22% chance.
23, yep.
We're gonna go ahead and delta hedge. We're gonna show you how to protect this. But in a normal circumstance, we probably wouldn't do it this early.
We'd wait till it got around here.
That's an important point. Yep.
Okay, so I've been teasing you guys with the ultimate options opportunity, right? I've been teasing you about that. And some of you can do it and some of you don't. We just, it's what you want to do. It's not our style. We'll tell you what we got. But what I'm going to do is I'm going to pull out an ultimate options class. This is class 326. And we have about 50 of these you can take in ultimate options. But we're going to actually, this is quick start. So we're going to go way, way ahead. And we're going to talk about the concept of delta hedging, and I'm going to teach you from the actual slides in the Ultimate Options deck. How many are on board for that? If you are, say, I'm on board, baby. We are on board, right? Here we go. So here we go. Okay, I'm on board. All right. So disclaimer, we did that earlier. Delta hedging. We got to go fast. We're going to try and get a basic competency on delta hedging here. We're going to try to understand the benefits of what we call delta neutral. This hopefully will give you some peace of mind when you do these types of trades. And, we're going to get a better return, we hope, by mitigating losses and keeping losses under control. And we're just going to look at each trade as one small part of your history, don't get caught up in the moment and see the big picture. So hedges were originally planted for defense and protection. This is called a hawthorn tree or a hawthorn bush. Look at those spines on that, Corey. You want to get caught in that? You want to ride your little Monty Python horse into that?
Ride my little scooter. Right directly.
That's looking nasty to me, And these things are amazing. Hawthorns grow to an average height and spread of 6 meters. So this thing actually, if you don't trim it down, will be 6 meters high and 6 meters wide. And they had these tanks back in 1944, and you see these little things right here on the front. Okay, they had all these hedgerows that they had to go through. This is called a hedgerow. Hey, if you hear a bustle in your hedgerow, don't be alarmed now. Okay, I just want to see if anyone caught the reference.
Hey, we've got Dana here. Dana is a hawthorn. How about that?
Dana is a hawthorn. Look at that. We have Dana Hawthorne. Dana, if there's a bustle in your hedgerow, don't be alarmed now. It's just a spring clean for the May Queen. That's all. Oh, look at that. James Looney's got it. Pink Floyd. Eric. Pink Floyd. Oh, come on, Eric. Close enough. I guess that's in the same ballpark, right? Oh, we got some Zepp. Oh, Rex Hudson's a Zeppelin fan. A little Stairway to Heaven there, okay? So if there's a bustle in your hedgerow, don't be alarmed now. It's probably just this huge tank with these rhino spikes on the front. This is interesting. In 1944, there were 1,500 square miles of hedgerows in Normandy. That's how thick this stuff was. And the hawthorns were so thick and dense that sharpened steel blades had to be welded on the front of almost 600 tanks. So when there's a bustle in your hedgerow, weld that sucker on there, because without them, the tanks couldn't get through the hedgerows. So what's the moral of the story? Defense. These are there for a defense, right? And a refuge from the storm, as it says. We first heard about this in defense in 1602. He says, I. I don't know if you could get away with that English in my English class, but I wish I'd have known that, because I said, hey, I'm just quoting Shakespeare, man. I. Myself sometimes, leaving the fear of God on the left hand and hiding mine honor in my necessity, am fain to shuffle, to hedge, and to lurch, to defend. Like you have a defensive hedge, that's defense, and lurch, attack. Defend and attack, hedge and lurch. So we know that a hedge was used in the context of defense. And so that's what a delta hedge is. You want to say anything about that? Look, we cranked through 8 slides that quick. That's pretty awesome.
Nice. That is. Yeah, I mean, that's really the concept here, is we're using this to defend a position and to reduce the risk of that position. So some trades, you basically are willing to wave the flag of surrender a little bit, and you say, okay, it's no longer about making profits. It's about not taking the big loss. And that's an important concept to understand, that every trade is not meant to be profitable. So if we look at it that way, and we understand that sometimes trades will move against us, we have some tools, some hedging ideas that can basically flatline this and say, okay, no matter what it does from here over the next little bit, I'm going to be flat. If it goes higher, I break even. If it goes lower, I break even from this point on. And that's that's reasonable to do. That's basically just put the trade on ice, wave the flag of surrender from a profit standpoint, and just get out of there without losing a lot.
Okay, now let's look at this right here, and you guys pay attention to this, okay? Everyone lock in. This is really an important thing, so everyone get locked in right here. We have three things basically that can mess with the price of our option here. We have delta, theta, and vega. Now, if you remember, delta is the movement of the price. You follow? And theta is the movement of the time. And vega is the movement of the volatility. I don't know how to spell volatility. Now, we're going to talk about all three of these, and you guys are going to fill in the blanks here, okay? What happens, what direction does time move? What direction does time move? We'll start with that one. And this should be pretty easy. It moves forward. Thank you. And it's linear. Thank you. It moves forward. As much as I've tried to stop the hands of time, like sands through the hourglass, Corey, so are the days of our lives. Okay? That's just how it is. So we can pretty much, we kind of get a grip on that. If time moves forward quickly here, we're pretty happy, right? That's not a monster. That's a tiny little pipsqueak monster. Okay, now let me show you what happens with volatility, okay? Let's open this up, and let's start taking the volatility up. So look what's happening when we take the volatility up. Not much. And now let's take the volatility down. It's almost negligible. See this little vega in here? It's almost negligible. So the time we're not really afraid of. It's not a real monster I'm afraid of. The volatility, it's a little mousy, little pipsqueak here. If we lose money in this trade, can it become, see, volatility gets swallowed up by time. No matter how volatile, implied volatility goes up, time's going to swallow this up, and at the end, you're either going to have $27 or something else. So of time, volatility, and price, which is really the monster here that could really hurt us and the one that's hard to deal with, right? Jared's loving this. It's price. It's the delta. It's this price, right? So when you're in a trade like this one, this is kind of what you're looking at right here, right? When these Greeks turn nasty, delta often is the main threat. I mean, this little guy right here, poor earnings report, the vega moves, it's like, oh, I'm sitting on this little problem here with volatility after an earnings report. Remember how we talked about that volatility crush after earnings last time, Corey? And then over here, you got this poor guy getting eaten up by time. Well, if you bought an option, that might be a big deal. If you were long an option, if you're the one selling the milk, you love the time to disappear. But if you're buying the milk, you don't want time to go by fast. Your milk will expire. So in this type of a trade we're in here, you're right. It's really the ups and downs of delta that give us the biggest monster to deal with. Is that all right?
Yeah, and
you guys liking the visuals? Look at everyone liking my visuals here. You guys are liking this.
Big fans. And the theta on this trade, remember, that's helping us because we collected our credit.
Yep.
We make all
Theta's
of our money
side.
if this trade expires. So every day that ticks forward and we're in the right spot, we're making more money. We're progressing towards that max profitability. But it's the price move that can get you into trouble. Remember, we put on a trade kind of acting as an insurance company and saying, we don't think it'll go here. Well, what if the price is going there? We need to be prepared to manage risk if the price is going to the levels we didn't think it would go to. And that's what delta is it's the price move that's going where you don't want it to be.
Okay, I'm going to cover these price up. I'm going to show you something. I'm going to go $50 here, and I'm going to go, what was it, $52.50, was it?
Yeah, $52.50.
Okay, now watch this.
Perfect.
Watch this. I'm going to go right here. Here's 100. Watch this. Here's 100. Here's 50. Here's 27. So I'm going to go from 50 all the way here to 27. I know that. And then I also know at 52.50, the most I can lose in this was what? What was it, Corey? Do you remember? Hang on, let me look. Let's see. The most I could lose was $2.50 in that spread, correct? Is that right, Corey? Oh, I lost your sound.
Oops, sorry about that. I was talking to myself. So 250 minus 27 cent
Minus 20,
credit.
yeah, minus the credit.
223 would be our max loss.
So 223. So I'm just going to go right here with my marker, and I'm going to go 223, which is about here, and that starts about there.
Go just below 200.
Yeah, just 220. What is it? 223. So
yep,
now I'm going to go right here to 5250, right about there. I know that is so everything under 50, I make $27. Everything over 250, I lose 200 and whatever $27 was. And I connect those dots, and guess what I got, ladies and gentlemen, right there. Guess what we got? We just built a risk graph that looks just like that one up there. Is that just ridiculous and cool? How many of you like to learn how to do these? Yeah, Brett's like, risk graph, man. Just what I thought, Ronald Miner says. It's a good thing you got Corey. Bring it, see? Oh, someone says, I need this. So one of the rules we have in Ultimate Options is we don't use the software. We actually learn how to draw these just like that, baby. And we learn how to do it with strike prices and do it in our head. And so what does it take to do this? Practice. Yeah. And Gary brings up a good question. I will never have to buy this stock because a call is a promise to sell, right? And a right to buy. So I'll never have to take, we're never going to take of this stock. Now, this is what's importantly. Ultimately, now watch this. Now that I have this risk graph done, ultimately, the only thing that's going to matter when the time runs out, it won't matter what the Vega is when the time runs out, and it won't matter what happens when the time runs out. It's really going to be, where is the stock price when we're done with this? If the stock price is here or lower, we're going to make $27, and that was most likely. There's a 77% chance of that. If the stock price is here or higher, boy, we could be on the hook for 200 whatever it was, 220 some odd dollars.
223.
And then of course, there's all these, right? If it's in here, I'm going to lose $100, right? So delta determines our fate, not Vega, not theta. It's the stock price that determines our fate. So you and I are going to put up our dukes. We're going to get our gloves on. We're going to say, hey, this is. Let me tell you what I do. Okay, I'm going to tell you exactly what I do. Look, I am. Oh, Ben So says, plotting that risk graph manually, it absolutely makes sense to us. Fantastic. That's why we're going to do it. Listen, I would love to do what Corey and let me see this. I would love to do what Corey does and just look at it and know what the graph will do. Well, who doesn't want to be like Corey? I'd like to be as handsome as Corey is. Okay.
Yeah, right.
I would. Hey, you've won games before. We might have to show you the clip. I'll tell you what, on the last day, we're showing the clip. On the last day, we're going to show Corey's game winner. Okay. We're going to show him.
My claim to fame.
So I'll tell you what I do. Okay. I'll tell you what I do. When I get in a fight where I'm the smaller guy like this, I'm a little tiny guy, and I have a great big monster that's bigger and stronger and scary to me, I'll tell you what I do. I take off my gloves, I double up my fists, and I run like hell and go find someone big to help me. That's what you ever see Happy Days?
Wait a second. I'm supposed to run to you.
No,
You're way bigger than me.
I'm telling you.
You're my backup.
I am not going to fight that battle. I'm like Richie Cunningham in Happy Days. I'm going to go get the Fonz, okay? Anyone starts messing with me, I'm going to go get the Fonz, and, the Fonz is going to go, go right that. It's funny, Robin's like, okay, these are ingrained in my head now. That is the perfect idea. That's the idea.
I love this. Dana says, I think Andy would have to run to Shaq, which is about right. If you have to find someone bigger than you, you got to go get Shaquille O'Neal or somebody like that. I think that's right.
Yep. So here's a quote that I give, and this isn't like, if you go to WikiQuote, there's no quotes by Andy Tanner. Okay, there's none. All right, but here's one that I'll tell you: always remain bigger than your money. Don't let your money get bigger than you. Always remain bigger than your money. So the first thing I will say before delta hedging is, if my position size is small, this will never happen to me. If I, for example, right here, This is a very small position size, and it's probably too small for my account. $26, what am I going to do? Supersize my Happy Meal in the freaking drive-through, right? Yeah, I got $26.99. Go ahead and 27. Give me an extra ketchup bottle now. Give me an extra ketchup sauce, right? We're in the drive-through in style at $27 at McDonald's. It's not that big, but I'll tell you what else is nice. If you got in trouble, well, you're looking at a $200 slap in the face, and that's not fun, but at least you could handle it. So one of the nice things is if I went to 10, I'd have $270, which is probably where I'd do. I'd like $270, and I got a $2,000 risk. I can deal with that. But if I went to 100, now I got $2,700 reward, but I got $22,000 in risk. That's going to get you in trouble with your spouse. You drop 22 grand on something, nothing to show for it. She's going to have something to say to you. So just be mindful that if you keep your position small, this monster will work for you and you don't work for it. Always be bigger than your money. Always be bigger than your money. Don't let your money make you do stupid stuff is what that really means. But since I can't go out and get quoted for saying, don't let your money make you do stupid stuff, instead I say, hey, just remain bigger than your money, right? Look, you're going to experience...
I like it the other way, too.
Just don't do stupid stuff. Yeah, don't let money make you do stupid stuff. Hey, most people that go to jail is because their money made them do stupid stuff, right? And it's either because they had fear or greed, one of the two. If you get too big to where all of a sudden you had too big of a position size, you got too big, this thing got away from you, now you go fight this guy, right? But if you just say, look, you little tiny piece of $1 bill, you go work for me now. Your job is to work for me. Get out there and work. Get out, go work. Go, okay, no, go work. You're fired, go work. And so you stay bigger than this guy. But if all of a sudden you do find yourself like this, it's nice to have a buddy, isn't it? It's nice to sit there and say, look, you deal with him. That's a fair fight, right? This is not a fair fight. This is a fair fight, right? And so what would really be cool is this. What if you did both? Right? What if you did both? So if a misbehaving position is both small and delta neutral, now I can sit there and kind of enjoy this little, it becomes entertaining. I can kick back and do this. And so the purpose of these types of class with me and Corey is to give you a little peace of mind, right? And understand the benefits of having a position that is both small and neutralized. And I'll tell you, this is a lot more fun than this. See these two? Okay, let me say it again. This is a lot more fun than this. This sucks. Okay, this gets people out of trading. This blows up your account. This right here is kind of entertaining. Look at these little guys fight right here. Look at them fight. So, watch this. If I have a stock position with, let's say, ABC stock, and I bought that stock 100 shares at 66, my risk graph means that if it goes to 67, I would make $100. If it goes to 68, I'd make $200. If it goes to 69, I'd make, $300. If it goes to 70, I got 400 simoleons if it goes up. So that's nice. So there's no monster over here. But if it goes down, see, this is where my monster's at. If it goes down, now I lose 100, 200, 300, 400 to the downside. So my monster is over here, right? So how would I hedge that in theory? And I wouldn't do it this way. This is just for illustrative purposes. So what if I were to do this? What if this were stock XYZ over here, XYZ with this guy, and we were short, Corey? We were short 100 shares. Well, that means if it went up, I'd lose $100. If it went up, I'd lose 200 and 300. And the nasty guy is on this side of the trade. But over here, we're making money. Does everybody understand that? So this would be a short position, and this over here would be a long position. This is where we own stock, and this is where we're short stock. Now watch this little concept right here and see if you like this. So if we owned both these stocks, let's just see what would happen to our total account down here if we added these together, Corey. And let me make sure, is everybody kind of following this so far? Give me a yes if you're following this. Eduardo's already got it. Everyone's following this. Yeah, this is beautiful. Caleb, the answer to that's yes. And if you look in the Mentor Club, we have done this. We do it all the time. So the answer is yes. Okay, now, this is the risk management pillar. This is right. Now, let's look at our total portfolio down here and add these together. Let's say the stock goes down to 65. Both stocks go down to 65. So if this one goes down to 65, right, this one actually goes up, right? So if these were in tandem, if these stocks moved together, if the whole market went down, right, and both of them went down at the same time, this position would offset this position, and the line, believe it or not, watch this, if it goes down to 65, if both goes down to 65, you'd make 100 here, but you'd lose 100 here, so that means you'd have a wash here. If it went up to 67, well, you'd lose 100 here, but you gain 100 here, so that'd be a wash here. If it went all the way up here to 400, well, it'd be 0 and all. So all of a sudden, you get what's called a flat line or a delta neutral, a flat line. If these stocks were, like if this, I'll tell you a better way to put this. If this were 1 share of the SPX and this were 100 shares of the SPY, that's exactly what it would be, right, Corey?
That's exactly right. Yep. Everything gained on the one side would be lost on the other. So it just puts the trade, flattens it out, basically puts it on ice.
Now,
and
yeah,
the concept behind that, I was just going to say that we're not going to use long and short stock because, you know, we're using option strategies. We already have a position
right
that is going to be X amount of delta. It's either long or short, a certain amount of delta. So we can use stock on the other side of that, but we're still going to match them up. And so we're going to go through that step by step to make sure you understand. But first, you got to find the delta of your current trade, and then you've got to say, okay, how big is this monster? Now I'm going to use stock on the other side, and it's going to do the same thing, so that every bit that your option trade loses, the stock makes, and it flattens that out from that point on. So we'll go through it.
So this is important to think in terms of context and not content. Don't worry about stock. Don't worry about options. Don't even worry about cash right now. What you're going to worry about is a risk graph right now. Don't even worry. Let's just understand that a risk graph that looks like this combined with a risk graph that looks like this ends up looking like this. They neutralize each other. And that is the biggest thing to understand. Don't worry about stock. Don't worry about options. Don't worry about your 401k. Don't worry about any of this stuff. However, I love where Craig is going with this, because the answer is yes, you could do this, Craig. Absolutely. Not only you could, you should. But right here, we're just saying, look, this graph and this graph put together gives us a neutral position, and that's what that looks like when you get these two guys just neutralizing each other. So this is an iron condor, and this is the trade that you guys actually learned how to do last week, right? This gold thing right here. And we're going to learn to build these graphs and the whole bit, and we have a reward of $70 here. We have a risk of $930 here. So we got about a 7% chance, or excuse me, a 7% return, 90% probability. And do you guys remember last time where I told you that this type of return is not normal? Like, for example, if I get my calculator out, let's just review this, and I'm going to make $62 if this works out. My risk is 438. Okay, I'm getting a 14% return on a 97% probability. The reason is because the VIX is so high right now. It's incredible. The VIX is high. Normally, you'd get about half that in this type of percentage. Is that fair to say, Corey?
Oops, sorry, I was typing away. Yep, that's exactly right.
So we look at this, and this is how you start with the price in the middle. Now, again, we're not too concerned about Vega. We're not too concerned about theta, time, and volatility. They're going to take care of themselves. But we're very concerned about where this price winds up, right? Where this price winds up is going to determine our fate. And we're saying, look, I don't know if it's going to go up or down. I'm just making a bet that it stays in the area. I'm just making a bet that it stays in the area, okay? And here's our percentages. Very realistic, okay? So that's great. So if you think, I'm just going to say, if you think that this is your ticket to heaven and you think that, you're just going to score this every time and then it's never going to go down here, never going to go up here, look, what are the percentages? 10% of the time you're going to be wrong. And if you think you can just set this and forget it and just like go to one session with Andy and Corey and say, oh, I learned what an iron condor is, now I got it, I'm going to go make money now every time, you are smoking Colorado grade marijuana. Okay, and these guys in Colorado, for those of you outside the U.S., this is the Amsterdam of the United States right here. Okay, you go to Colorado, you could smoke the weed there. Okay, now I do not indulge. Corey, do you ever indulge? I don't.
I do not indulge.
You do not indulge. But if you think this is going to happen, you're smoking Colorado grade marijuana. In fact, this is what people think is going to happen. They do it like this. They say, oh my gosh, this is awesome. I'm going to get 7.25%. So what I'll do is first, I'll break both Andy's rules. I'll go big, right? I'll go big position size for $700. Now I got my car payment made, right? And I'll just do this for 8.7 weeks in a row, and I'll make 65% on my money, and now I'm killing Warren Buffett because Warren Buffett only makes like 20% a year. I'm going to make 65% in 8.7 weeks, and I'm going to be great. Well, if you think that's going to happen, just take a nice big drag and enjoy that dream because it is a dream, okay? We got you guys got, let's see, Humboldt County. Dana Hawthorne says Humboldt County. Oh, Kevin George says he's been. Now that's not a confession. That's not just take a drag. I don't know. Is that the word? Is that how you smoke a joint, Jessica? I don't know. I have no idea. Larry says, I'm riding this train. Oh, Jessica, I love it. Just like, oh my gosh, unbelievable. Okay. Oh, he says, I'll keeping that to myself, Kevin says. Hey, it's forever now, no. But anyway, you got to be realistic about this stuff. Okay, so look at the real math on this. If you don't know how to hedge these, you get 70, 70, 70, 70, 70. All of a sudden, that 1 month that sucks, you lose 930, 70, 70, 70, 70. You're down $300. So the iron condor, even despite its 90% chance of probabilities, we're killing it right now, right? We are going to make money in this trade. I just do not see us losing money in this trade. So this one represents one of these that was really easy and it went well, okay? So that's a big deal. Now, so that just shows you the math that you're actually set up to. If you just set it and forget it, you'll lose 28% on these, okay? They are not set up to win because the amount you lose when you're wrong is so big that it takes away all your cool profits while you're doing this, okay? So that's fine. So that's all good to know, okay? Now, let's take a look at this. So we got a monster down here, and if we go down this way, right at this line right here, where the line is now, if the price hits 266.80, look at where this purple line will be. That's a loss of 29.09. So let's look at how it is right here. Watch. If I come down here on this one, I'm at a loss at 106. See the correlation between what I'm doing? If I come down to this price slice, if this stock of gold ETF, I wake up in the morning and it comes all the way down here, to get out of the trade, I'd have to lose $104 to get out of my trade. If it went up here, I'd lose $107 to get out of my trade. Well, it's the same thing here. Here it would cost me $290 to get out, and it cost me $368 to get out. Now, let's think about that, though. That actually would not be a bad idea, because remember, the loss comes when you take a full loss. Talk about that, Corey, taking what we call a max loss.
Right, and that's the thing that really knocks traders out. And you have to understand, in terms of this trade, is it can be the type of position where you get this false sense of security because it's a high probability trade.
Yep.
But high probability trade does not mean that each one is going to work out. It means that literally, if you've got a 90% success rate, well, 10% of the time you need to do something to avoid that large loss.
That max loss.
When that max loss is coming, it's easy to have a game plan ahead of time to manage that. But if you have no plan whatsoever, you're going to sit there and you're just going to hope that there's a better day tomorrow. You're going to go, well, dang, I didn't expect this, so hopefully it'll come back for me. And then the next day it gets worse, and pretty soon you're sitting on that max loss and you've done nothing. And, hope is definitely not one of the things that we want to fall back on. And it comes back to that fear and greed mentality, right? Where if you're just sitting there hoping that it'll come back and hoping that it'll come back, you have no control. You've lost control at that point, and you're at the mercy of the markets. And the market, it will, eventually it will make you pay the price if you're not ready to act. So what we're talking about is saying we understand that most of the time we don't have to do anything, but what happens in that 10% of the time where we do, that's where we want to take that loss down. And instead of it being $900 loss, what if we could knock that loss down to $300 or $400? Now you might look at that and you say, well, that stinks. I'm taking a big loss. I'm giving back, maybe 3 weeks or 4 weeks worth of profits. Yeah, that's perfectly reasonable. If you can make profit 70, and you knock that loss down to $200, $300, $400, that's good trading, because then 70, and that's the goal. The goal is not to avoid losses altogether. The goal is to minimize damage when the trade is going the wrong direction.
If you could turn this $930 loss into a $330 loss, right? Look at what that does to this math. Right now you're going to be up $300 instead of down $300. Does that make sense to everybody? So the key here when this goes nasty is not to turn the loss into a win, but to reduce this from being a max loss to being something that is less than a max loss. Please type in I get it if you get that. Is it Alina get it? Alina Graham gets it? I get it. So the idea here is not to always win. It's just like I said. Well, it's like I said up here in somewhere in one of these quotes. Look, see each trade as a small part of a history, and that's what I mean by this. This trade is just a small part of a trading history. I don't care if I have one nasty little loss. I just don't need a max loss right here. Risk is related to control. And so when this thing is in here, I have a pretty good control of it when it's in here. But once it gets started to the edge, I'm starting to lose control of my delta here. When control goes down, risk goes up. But when control goes up, risk goes down. So the reason we like the delta hedge is it gives us a chance to control this and lock it down and control the risk. Okay, we're not going to turn a loss into a win. But what we are going to be able to do is mitigate this. Now watch this. One of the things you could do is just sell. Let's say that you decided to just sell when it hit there. And let's say that happens twice on either one. Well, we're still losing, but we're not losing as bad as we were. So just selling when it hits here is not an answer, right? The probability of touching it, is different than the probability of expiring. Probability expiring means it can go down and back up. Probability touching means we've lost control of the trade. So there's a 90% chance that we'll be okay here, but there's an 10% chance it'll touch it and we'll have to do something. So that's not too big of a deal to understand now. So a credit trade is a lot like a football game in that you might start out. Sorry, Raiders fans. I'm sorry, Raiders fans. I didn't do it on purpose. It was just available. Okay, but what happens in a football game is, you might start off with 50-50, and all of a sudden, the Raiders kick off, fumble the football, and the Texans march it down for a touchdown. Now you're in dire straits. See, now you're no longer at a 50% chance of winning. So you might start off, watch this, you might start off with a 90% chance of winning, but a week later, you might only have a 76% chance of winning. See what happened? Because the stock went from 40 to 45, they scored a touchdown on us. Our chances of winning in this one are falling. They're still pretty good. We're still probably going to win the game, but it's not near as good as our chances in this one where we're really looking to win the game. Okay, you guys okay with these analogies? So this is good. So yeah, so this right here, this black line is when it's at expiration, right? That's done. The black line is expiration, and the purple line is the timeline. It's where you have still a little bit of time left, okay? So this is cool stuff. So let's pretend that this stock goes down, and we're right here now. The price has fallen from 285 to 266, and all of a sudden, you know, this risk of 930 is showing his ugly face. That really sucks right there, right? So watch this. If we look, okay, at this angle of this line, okay, see the angle of this line? And this is where we go back to our chart. Just look at the angle of that line. If I could find a separate investment, that had a line like this at this angle, well, that one plus this angle that I have here would equal what? Delta neutral. So the way to put an asset on this is to find a trade with this stock, we'll call it XYZ, to go out and find a trade in the same stock, XYZ, that would have a risk graph that looked like this. That has a risk graph look like this to exactly counterbalance the risk that I'm taking now and put an asset on it. Give me a yes if that makes sense. Faisal Hadi says this is truly power. It is truly power, right? So cool, someone says. So cool. Yes, got it. Aye. Jessica says, hey, are you from Canada? Hey. Fantastic. Makes total sense. Okay, now this is what's cool. Is the name of the stock is XYZ. We're going to do the same stock. We're going to do this in the same stock. So just watch this, okay, and you'll catch it. You'll catch it. You'll get it. You'll get it. So right here, this has a net delta of 26. Now let me show you how we find that. Okay, watch. In fact, we're just going to do it right here. You're going to see it. You're going to see it. Watch this. Let's look at a trade as if I added 100 shares of stock. Now we'll start with this. Watch this. Let's go back. Well, let's not do gold. Let's do the good one. Let's do EOG just for fun. And let's look at how much trouble we're in. So let's just pretend that we're right here, which we are. Okay, let's move right to the price slice right here, which we are. And can everyone see the slope of the purple line right now? Okay, so we have a problem if the stock goes which direction? Everyone tell me, we have a problem if the stock goes which direction? Up. That's right, up. So if we were to start over, what could we do to create a risk graph in the same stock, EOG, that makes it look like up? Well, watch this. I could simply go out, Corey, and maybe I just buy some stock. Let's just start with 100 shares. So all of a sudden now notice I've unchecked these, right? I've unchecked these. So all we see is 100 shares of stock. Look at what that line looks like. That one is, in fact, let me see if I can even put a little bit of ink on here like this. See the ink right here? Now watch this. I'm going to pull this off. Doink. Now we're neutral. Doink, doink. Look at that, guys. Look at the angle of this one that I did, right? Let's just put it right there. See that? See how nice that angle is right there? It's almost a nice little perfect X, isn't it? So we're pretty close to where we want to be. So that's kind of cool stuff. So who's getting the general idea of this so far? That I could actually, genius Axel says, Axel Graveston Bright, let's see, Graveston Broughton, Graveston Broughton. Axel is in the house, ladies and gentlemen. You know what? When I get in trouble, I'm just going to tell you what happens right now, okay? When I get in trouble in a trade, okay, and I'm facing a tough time right here, you know what I do? I just go get Axel. right here. That's what I do. I just say, hey, like let's say this is COVID-19 right here, right? This is COVID-19 right here. COVID-19 staring me in the face. I got you covered. Why? Because over here I got Axel. Right here. Is it Axel or Axel? It's Axel. Where'd he go? I'm missing I got to get it back now. Where'd that Axel? Yeah, EXEL, Axel. Right there. That's him. Got him in my corner. COVID's done. I got Axel. All right, enough of that. So hey, look, we didn't promise the quality of humor. We just promised frequent attempts right here, okay? So I say to myself, all right, let's see how much Axel we need. Let's see how much muscle we need in this thing. So watch this right here, you guys. Watch this. I'm going to get rid of my stock, get rid of this, and here we are. Now, this is called a price slice. See this little yellow dotted line that I keep grabbing, and I keep moving it, and moving it, and moving it. And you'll notice the price slice down here moves. So this software is pretty nice to have. And I'm going to stick it right on the price. And it says I got a delta of minus 11.69. So I'm going to give you guys just a little quiz right here. Just a little bit of quiz. Okay? Now, it's not Axel Foley. It's more like Axel Rose. So how many...
Hey, Andy, show him really slow again how you click that line there, because we've had a couple of questions about that.
Yeah, there's
how
a
you,
little...
How you just put the price slices.
Yeah, let me see if I can pull it off here and go here. There's a little dotted line right here. Everyone see it's gold and it's dashed. And right now it's at 42.27. Everybody see that? If I put my mouse on it right like that, see how it turns from a finger pointer to an adjuster. See the cursor change from finger to adjuster when I get it? I can click on that and see now I can drag it. Now, see I can drag that yellow line now. I can drag that dotted line wherever I want. See? I could see what it would be here. I could see what it would be here. And this is called a price slice. It helps me adjust. You can see how this adjusts my percentage of winning or losing and all this type of stuff. So I'm going to stick it right on the price of where the price is today. Right on this hash mark. This is where the price is today. Right on that little hash mark. Bong. And now it gives me the delta. So what this really means is delta means that if this goes up $1, I'm going to lose 11 bucks. If it goes down $1, I'm going to gain $11.73. Let me say that again. If this goes from 45.31 to 46.31, if it goes up $1, I'm going to lose $11.73. If it goes down, I'm going to gain $1.73. The time is going to tick away. We're going to make $3.08 on the time to gate, regardless today. And for every 1% in volatility this increases, I'll lose 67 cents. So small monster, big, ugly, nasty monster. So I'm going to have you guys take a guess. Since each stock has a delta of 1, right, 100, see this? 100 shares has a delta of 100. Watch this. 20 shares, it makes sense. Look, if I have 20 shares of stock and it goes up $1, I'm going to make 20 bucks, right? If I have 10 shares of stock and it goes up $1, I'm going to make 10 bucks. If I have 1 share and it goes up $1, I'm going to make $1, a delta. So can everyone see right here that for every share of stock I buy, I gain 1 point of delta. Do you see that? So watch this. Now here we go. Here's the big moment. Here's the big one. Right here, I have a delta on this position of $11.73. Tell me how many shares of stock I will buy to make this trade delta neutral. I'm loving you guys. I'm loving you guys. We got 99% of you guys getting this right. Okay, now think about it. So just watch this. Now, this is a positive 1 with 1 share, and I'm trying to neutralize 11. So what would make us neutral? If I have a monster, watch this now. If I have a monster on this side that is saying, let's go back to Axel here. Okay, where am I at? if I have a monster that I'm facing, and that monster says, I am a negative 11.75, what size axle do I need here? When I call axle into play, if this dude over here is an 11.75, what am I going to do to make this a fair fight? How big does this monster over here have to be to make it an equal fair fight? You guys got it. I want to have plus 11.75, and which would be, I can't buy 3/4 of a share, so that boils it down to either 11 shares or 12 shares is the answer. And most of you guys got it right. You said, you know what, Andy, go buy 12 shares of this and just see what's going to happen. So I'm going to buy 12 shares is all. Okay, now watch this over here. Ready to go, ready to go. One, whoop, let's see if I can do it. One, no, it's going to go on 100 increments, so I'm just going to put in 12. So that's fine, 12. So now over here I have plus 12 delta to combat that minus 11 delta. Let's see what the risk graph does when we put this on. One, I'm going to click down here. Ready? 1, 2, 3. Booyah! Now look at what my delta is. It's 0.26. It's 0.26. We got a fair fight on our hands now, ladies and gentlemen. Now what's beautiful about this here is look what it does to this risk graph. Is I still can make money on my time decay, right? And it's pushed this out a little bit here, right? And I can kind of control this risk. Now I'm down $36. I've frozen it in time. See, down here I'm down 30 bucks. Okay, great. I hit this. I'm still down about 30 bucks. But notice if it goes up, this stuff doesn't move very much because I've delta neutraled this. And so now look at how this doesn't change in terms of delta. And now I can wait. If it starts going back up, I can pull that off and enjoy my time decay. If it comes back down. If it keeps going up, then right here is maybe I exit the trade and I'm only down 40 bucks. That's a lot better than losing, ladies and gentlemen, a lot better than losing 223. Lot better than losing 223. So if I tell my story and I tell that story in a way that says, yeah, I didn't lose, let's find that graph. I didn't lose $930, I lost 20 or I lost 50. Then my math changes huge because now I can learn how to delta hedge on some of this math. Now I'm not going to go through all these complex examples because some of these are a little bit different. And, I'm going to show you guys how this delta hedging works. This is a long stock. This is the one we did, right? We got a long stock here that helps us against this down here. This is exactly what we did. We bought some stock here. Watch, I'll even pull this over. Oh, it won't let me. This line here of long stock is equal and opposite to this line here that was going down. That's exactly what we just did right here, is we took this line going down, we saw how many shares of hedge, we had to delta hedge, bam. Now we've locked the risk down. Do you guys like this stuff? Yes? Is this pretty cool to learn? Oh, sweet child of mine, Brett says. It's so cool. In fact, mind blown. Gustavo says mind blown. I love it when the mind is blown. What I'm hoping is that you guys are saying, I can get every bit as excited about the risk management this week as I did about the awesome, ridiculous, cool trades we did last week. Because now you've had your first lesson on delta hedging. Now, how do you get good at this? How do you get good at this? Oh, practicing. Where do you practice? For real? No, paper trade. I love it. Paper trade a lot. Paper trade a lot. It's just like playing the piano. It's just like, Carnegie Hall kind of says, I'll go to Carnegie. I'll twinkle the ivories a little bit. I'm a closet piano player. I don't do it in public, but I'll close the closet and play a little. I'll go for that. So this is awesome stuff. So the goal here is really, really simple. The goal here in Quickstar Live, look, it's not to make you an expert in delta hedging. It's help you see the big picture. And the big picture is really this, and this. That's the big picture. If you can understand that delta is the ugliest monster, okay, don't let him get big, keep him small. If he does get big, find a monster of equal and opposing strength, and then let him fight it out. Kick your feet up and say, great, great. It's just part of a long history. And this is great. New tool for my toolbox, Jared Smith says. Right? Fantastic. Ian says, can you explain how the risk graph flattened with 12 shares against one trend after calls?
Yeah,
I'll tell you why. I'll do that.
I wanted to go through that really quick, Andy. If you go back to that EOG, I think that's a good question that a few people had. And so if you look at this EOG, now take off the stock. What this delta tells us right there, that's at 11, or we'll round it to 12. Okay, your delta is basically 12.
In fact, let's do it this way. Let's do it this way. The delta of my short option is 28. The delta of my long option is 16. So 28 and 16, if I add those together and I put them both on there at the same time, plus 28 and negative 16, 28.28 and 16.52 is 11.75.
Right. So that's what they would call the net delta, meaning as the stock goes up, let's just say the stock goes up $1 per share. Okay, this is quoting you in $1 increments.
Let's just go from 45. 45.31 to 46.31.
Now, what that's telling you is that your spread trade that you're in is going to lose $12. You're going to lose $12 per spread. That's the current delta.
For every dollar it moves.
Yep. So we're at risk if it's going the wrong way. Right now, the net delta is 12.
Yep.
So let me ask you all a question. If I'm going to lose $12 if the stock goes up $1 per share that way, if I buy 12 shares and the stock goes up $1 per share, how much money have you made? If you owned 12 shares and the stock goes up $1 per share, how much have you made in the stock? Just in the stock portion, not in the overall trade.
Let me go back
in the stock portion. And everybody understands that concept, because if I had 100 shares and the stock goes up $1 per share, I made $100. Well, if I only have 12 shares and the stock goes up $1, I've made $12. So by adding the counterbalance, by adding 12 shares, which is what our net delta in the trade is, we're currently short 12 delta in the spread. We buy 12 shares, that gets us 12 long delta. The net effect is if you're positive 12 minus 12, you're at zero. That's what delta neutral means. Is it means you've added a monster that literally calculates out to the same size of the monster on the other side. And some people get a little bit too worried about, perfection. And they say, well, it's 11.7. Well, 12 is close enough, right? All we're doing is basically getting a monster that's essentially the same size. And what that's going to do is, if the stock goes up this way, our hedge makes what the spread loses. Now, let me ask you another quiz question here. What if the stock had gone down $1 per share? So we add this hedge, we buy 12 shares. If the stock goes down $1 per share, how much have you lost in the stock?
Well,
if you own 12 shares.
This is a great way to look at it. Maybe I can help them with this, Corey, by drawing it this way. Let me just draw it like this, okay? And let's draw a line right here, okay? So if I lose this much in the bottom trade, I gain this much in the top trade. If I lose this much in the bottom trade, I gain this much in the top trade. If it goes this way and I lose this much on the purple line, I gain this much on this line for a reasonable distance. And it helps me gain control of my trade. So
that's right. So our 12 shares, if the stock goes down $1 per share, we lost $12. But what does that mean? Our spread made back. Our spread made back 12. So it's just neutralizing the trade. We're basically putting it in a situation where from here, the next dollar move that it goes either way, the next little bit of movement, we're not going to make anything or losing anything. We're just putting this sucker on ice because it's not going the way we had planned. And importantly, that takes our risk down. That just reduces risk in the overall position.
Now, let me review something I gave you in the very first time we were together when I invited you into the 4 Pillars program and all these programs. There's a big difference between buying a business and trading stocks or options. Okay? Buying a business. If I buy a business, what I really want to do is find a Jack in the Box called Ruth Chris or whatever, and I say, my gosh, it's $5 to buy this business, and it cranks out money when we sell a stake. And at that point, after I put in my $5, I don't care. I hold this till the cows come home, and I let my grandkids have it. Does everybody understand the difference between buying? Yeah, it's Warren Buffett. That's exactly right, guys. Yeah, that's buying a business, okay? Trading options, this happens in Chicago, and all an option contract is an agreement between two people when one person makes a promise and the other person has a choice. And the person, gets this contract with this choice, and he gives this guy money for this contract. Is this right here a stock or an option? This piece of paper, is it a stock or an option? What is it? Yeah, it's an option. It has, there's no dividends going to get paid here. You don't own any stock. All you own is the choice to buy it, maybe. And so as the price of the underlying stock goes up and down, the value of this option goes up and down, and that's called what? Delta. Why am I writing with a mouse when I could write with my pen? That's called what? As the price of the stock goes up and down over here, the choice to buy it. Like if you have the choice to buy it at 5 and all of a sudden this goes up to 7, well, the value of this just went up $2, didn't it? Just went up $2. So you never, ever, 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 ever have to touch a share of stock, ever. If the value of that option goes up, I'll sell the option back to the options market in Chicago where they trade the options. So one of the questions I've gotten a couple times is, well, don't I have to buy the stock here? Don't I have to buy the stock and then sell? Nope. You're just simply making promises and buying choices. That's it. So are we doing this here on EOG to buy a business? Or is this a trade? What is this? Is this a business or a trade? Beautiful. Now, let me show you something here. So in this one, we'll just do this one more time. In this one, to delta hedge, I'd want a graph that goes this way, which would be what? Buying stock. Correct? Because if I buy stock, I would lose money in the stock if it went down, and I would make money in the stock if it went up. Let's make sure everyone's clear on that. Is that I'm going to make an opposing graph by buying stock that looks just like that, right? Just like this. See that line going up? See that line going down? You put them together and you're flat, right? That's how it works. Everybody understand that one? Yes? Crystal clear. I got crystal clear, a couple of crystal clears. That's good. Yes, yes, yes. Okay, now watch this. So this is a line buying stock. Now watch this on delta hedging. Let's go to gold. And let's pull off the call side and pretend we have this on this side. Now we have a graph. And I'm going to get rid of these. Hang on. Let me just set this up, and we're going to have a little quiz here. Let me get rid of one of these, delete this slice so we just have one, and let's just put it right on here where it is now, okay, right here where it is now. Let's blow it up big so everyone can kind of see it a little bit. So this one is sloping which way? Downward when we magnify it, to the left, downward to the left. It's the opposite trade of what we just did, right? It's sloping down. So let's magnify this so we can see it more easily, okay? Slight slope. Okay, everyone look at what the delta is right now. And tell me if I were scared of it. First of all, is this a big monster right now? Is this a big monster or little? Point. It's not 93, it's 0.93. Okay? So who can tell me what we could do to delta hedge this? Here we go. Who could tell me what should I do to delta hedge this? Oh, you guys are beautiful. Mary says nothing. It's not worth delta hedging. I like that answer, Mary. Okay, you're right. If we were to buy stock, right? If we were to buy stock, we want to hedge it here, so we would go long or short. We would go short, and we would do one share, because one share is very, very, very close. One is very, very negative. One is very, very close to 0.94. And if we throw that on there, now we have a flat graph, absolutely flat. And now our delta's like way neutral, way, 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 way neutral. But I like Mary's answer. We don't need to touch this, man. This thing's rocking. It's got a slight turn this way. We're fine. We're in the money. This thing's rolling. We can set our price slices to break even here and see we got a 97% chance of killing it in this trade. You guys are fantastic. Now, Theo, yeah, you can. And okay, now Theo has a great question. Corey, what you used to do as an options principle is, let's say I was one of your floor traders and I have about 50 of these positions open, right? 50 of them. And let's say there's 500 other traders on the floor. So, it's 2,500 different positions. And as the options principal, you were in charge of doing all that, right? Of hedging all that. So how often would you go in and delta hedge the entire firm's portfolios? I mean, did you just like once a month? Was that like a once a month deal? You take a vacation and then you come in and just check it once a month? Or is this something you were constantly balancing?
Yeah, we would balance it pretty regularly. And obviously if you have a large quantity of positions, then it gets hard to manage each one individually, and that's where we would probably fall in the beta weighting and just hedge it with the S&P products, where we say, okay, if we add all of these positions together and combine them together, it's kind of like one big market trade, and we can just use the S&P to hedge all of them under one asset. So
now I'm going to show you a little trick about when I start worrying about this, okay? When I start worrying about this, first of all, before we start delta hedging, I gave you two real keys that I'm going to ask you to repeat to me before I tell you when you actually start doing this, okay? The first key, before we talk about hedging this guy, what was the very first key to doing well in this stuff? The very first key was to be mindful to keep your position size small, to stay bigger than this guy, right? That's the first key. So never forget that. The second key is when does that monster get ugly? Well, he's not, notice here, the delta monster, let's get rid of one of these. So right here, the delta monster is about 1.5. Is that a very big monster? No, that's not a very big monster. Okay, what if the stock got to here? It's like 6. Is that a big monster? No, it's short 6 shares. That's not much. And it's really not hurting me. But if it got down into here, that's a 19. That's a big size monster. And if it got down to here, it's 20, and it's getting pretty big. So I'm going to show you a very special part of the chart that you're going to learn. We'll keep going on it. And it's right here. And it's where the blue line and the purple line cross, and this is called the theta switch. This is where I start worrying about stuff, the theta switch, and I'll tell you why. If you watch if I have time march forward, watch what happens on this line. In fact, I'm going to draw some arrows on this just to make it easier. As time marches on, this line goes up here on that side of the theta switch, but it goes down on this side. Just watch this movement right here. This is really cool to learn. As I'm just going to march the day, look at that. I'm just going to march slowly, day by day. I'm going to march. So on one side of the theta switch, time is benefiting me. But on the other side of the theta switch, if I go back to today, watch again. On one side of the theta switch, I have a positive theta. Watch this. Positive theta, positive theta. If I get on this side, watch this theta number. If I go on this side, it's killing me. So it helps me on this side, hurts me on this side. Helps me, hurts me, helps me, hurts me. Just watch this theta number right here. It helps me when it's on this side. It hurts me. Here I'm making $2 a day. Here I'm losing $5 a day. See that? So as long as I'm on this side, I know that every day I stay here, I'm getting closer to my $62 goal. See that? Why not let the time work for me? I'm getting closer to my $62 goal, right? But if I get on the other side of the theta switch, every day I wait to do something, it's hurting me. So one of the places I like to start messing around with this is when I get close to this theta switch and I look at my delta, and it makes sense because when it's going to start hurting me is when I have to start keeping my promises on my short option, right? On this short put. This is where it starts hurting me. So right when this gets around to the strike which I sold and the theta switch, right around in there is the time where I might, let's put this on ice. And if I do a delta hedge right here, then that takes away my ability to have a max loss because it just puts an asset on it. If it goes back up, great. I'll get that time decay and it works out. If it doesn't, well, I don't lose a massive lot of money. Does the big picture make sense? Yes? Yeah, I like that asterisk. That's a good way to think of it. Okay, is it more important to get the big picture here? Is it more important to get every little detail perfect or catch the big picture? What's the most important the first time you learn something? Is to get detail or big picture? Big picture, yeah, because we'll get the details. Already in Mentor Club, since you guys decided to Quick Start Lab, your ability to understand things in Mentor Club now are huge, huge, huge. And what you'll learn as you go on, what you'll simply learn as you go on, like in IBM, let's see what this looks like. You'll just learn how to start manipulating these graphs to where they look like that. And that's a pretty good looking risk graph right there, if I do say so myself, right? You start looking at trades. Let's see if Square's still looking pretty good. How many like that risk graph? Tell me what's cool about that risk graph right there. Corey's giving us the keys to Andy's caddy. That's pretty cool. That's a pretty cool risk graph, okay? And you'll get there at some point. You really will. You'll get there at some point, okay? Yeah, I love what Theo says here. We got control of this, don't we? Very good insight. Caleb says, that's sexy right there. I'd have to say it is. I'd have to say that's pretty sexy right there because this is where we are now. It's got a 50% chance going this way and a 50% chance going this way, but in the standard deviation, I like the money we're set to make in that, and I like the risk graph a lot where we are right there. So it's pretty fun stuff. Okay, now if you have a question, you can always email Corey if you don't get in the speed round. But we're going to start the speed round, and I'm just going to do a page worth of questions like I did before. On your mark, get set, ask a question, and we're off. And we're off and asking questions, and we're writing them down, and we're wrecking and going, and we're thanks so much for this. You're welcome. How do I move emotion from trading? Karma, when you figure that out, will you please tell me? You can't. The one way to do it is keep a trading journal and follow your rules, right? You have to follow rules. If you have rules, then your emotions aren't allowed to play, right? Having a hard time sending we'll go through this. This is fantastic. All right, let me see if I can I move this over to make this better maybe? I don't know if I can. I'll try. Let me see if I can grab this. You guys are asking great questions here. Make this, can I click on that and make it bigger? No, it's not letting me. How about there? How about I do that there? Does that help it? No. Oh well. Okay, we're just going to go right like this. Looks like that's a lot of good questions right there. So let's bring these up and let's answer as many as we can. And Corey's always there for us to help us answer questions, which we really appreciate. Corey deserves a freaking 2 clap, okay? This guy's a stud. Corey answers questions. He types away while I'm doing this stuff. Okay, how to make money if we have small positions? Well, I'll tell you this. Let's say that you are selling hamburgers and you are McDonald's, and each transaction on average is about $6. How would you make money if you were McDonald's if each transaction only has $6? Someone asked that question. Oh, you make it up in volume. So I have many smaller positions rather than one big position. Very, very good. Yeah, instead of having one trade, and I will tell you, I wouldn't go always one contract. I'd probably go 10 contracts on this with my account size or what I'm, go make myself $600 on 4,000 risk. I'm good with that, with me. So that'd be cool to do. Okay. Very sexy. You just call him by name. Just say Corey. Just say it. Very sexy. Corey. It's just how it is.
That had to be in response to some other question. There's no doubt about that.
No, that's Corey. It's got Corey written all over it, right? Okay. Thanks so much for doing this and answer our questions at the same time. We're working hard. There's a lot to go through, but we seem to have a pretty good system. Removing the emotion from trading. I'll give you some things. First of all, do it on paper and get practiced where it's not new. Second of all, put a big sign on your wall like I have that says, be fearful when people are greedy, and be greedy when people are fearful, because that's the sign I have on my wall. A trading journal makes a lot of sense. If you have small position sizes, you'll be less emotional than if you have big position sizes. When you have a big position, you'll be pretty emotional. So that's how you stay bigger than your money, is you keep your mission. Like people will call me about like Tesla, and Tesla will go through the hoop. Listen to this and write it down if you're taking notes. If you write it down, if you're taking notes, you might write this down. Greed is the fear of losing out on the big score. Greed is the fear of losing out on the big score. It's pain. Someone sees Tesla going through the roof and they didn't get in it, and so they call me up and they say, should I load up on Tesla? Because everyone wants to win the lottery. Everyone wants to make one trade that sets you up for life, or one sale. You know what? If you have McDonald's, you're going to have to make more than one sale. You want to make more than one sale, and you want to look at that one sale as just a small part of your history of your story. You're really going to have very few people who have the history of, I won the lottery and then I was done. But the craving of that, you think about the Garden of Eden. For most of our lives, we were farmers. Think about most people that read the Bible. People don't read it now, but back when people used to read it, they were farmers. And so the idea of a Garden of Eden with all fruit and no toil, spontaneous nourishment without work, is the ultimate something for nothing prospect. That's what heaven should be like, right? All fruit, no work. But here in mortality, it's work, and it's fun work. And when you learn to enjoy this type of stuff that we're doing, having fun with it, it's not work anyway. It's fun stuff. So greed is when you get a big position size looking for a big score. Now, here's the other problem. What if you have a big panic? Panic is the pain and fear of losing what you got. So fear, greed is the fear and pain. Greed is the fear and pain you feel missing out on the big score. Panic is the fear and pain you feel by losing everything you got. That's 401k city, right? You got all this money in your 401k, it's going down, oh my gosh, what do I do? So that can help you a little bit with that. When a delta head position expires, what do you do about the long and short shares? Well, the delta head's position was with stocks, so the stock's never going to expire, right? And we'll show you how to delta hedge with options. Of course, you can do that too. But we use stock today because it's simpler to show. But the long and short options are going to expire. You'll notice this in this trade. If we go back to EOG, okay, notice that my stock doesn't have an expiration window on it. It just exists. The only way the stock goes away is if it goes bankrupt. So the stock, you pull that off. Well, when would we pull that off? Either when it started going up, we could pull it off, or 17th of April, we're done. When you have an option, that's when the time decay. Notice that we have both the time decay and the end line here. Stock is just always purple. It just always is what it is. It's not going to change. Notice there's no theta here. There's no time decay monster here. There's no vega. The only monster you're dealing with stock is that 12 delta. That's it, because you got 12 shares, right? 12 shares. That's it. Throw these on. Now you got a hedge. Pull that off. You're back to your trade. Pretty simple. I get the concepts, but I'm struggling when it comes to paper trading. Any advice? Yes. Pat yourself on the back and say, you know what, I'm just like freaking Andy, because he struggled with paper trading as well. Who asked that question? That's such a good question. I didn't put your name on this right here. Where are you? I got to find you. I can't find you. That's a great question, whoever asked that. I can't see your name. I got too many.
A little plug for coaching. We launched the coaching program, and I actually have communicated with a couple of traders on here that are on the waiting list. And if you're on that waiting list and you're still waiting, you may try just reaching out to the support team and see if they can get you into one of those coaching sessions, especially for those that are kind of struggling with the paper trading and that. It's really going to speed up that learning curve and help you to take that next step working with the coaches. So I would say if you want that extra help, get in that coaching program. And if you're in the waiting list, reach out to support and see what they can do to kind of push you through and get you into that ASAP.
The reason we did, it's hard to do small group coaching because it's labor intensive, but imagine, like right now we have hundreds and hundreds of people on this call, hundreds. So hence all the questions and all the stuff. How would it feel to do this same thing, once a week with like 5 people, and that's it, right? So we do small group sessions where we can, get a lot more concentrated on the questions. The problem with that is, guys, if you can empathize with me a bit, is it's labor intensive. Like Corey, we have a limited amount of ventilators here, right? And so when you have an event like this, where all of a sudden people become interested in this type of risk management and protection, there's only so many ventilators that we got. So we're really working hard, but I'm not just going to throw a coach on that doesn't know what he's doing just to sell a coaching program or sequence. A person has to be qualified and trained by Corey and have experience before we put them in the center. And you just can't, like, ventilators take time to build, right? If that's a good analogy. So if you'll be patient with us on the waiting list, we thank you for that.
100%. And I see Jeffrey, I just forwarded that. Jeffrey just produced a link that support sent him. So maybe, that's a way to get into coaching. So I went ahead and forwarded that from Jeffrey. So thank you for sending that over. If you're interested in the coaching, that's a way to get access to it.
What is that email?
It's cashflowacademy.com, and then it's got a big URL, products.
Can you cut and paste it into the chat box? Do you have power to do that, or do I have to make you like an organizer to do that?
I should be able to do that. Let's see what
cut and paste it in the text box.
I'm going to send to the entire audience. How about that? There we go.
Is it possible to recommend to exit the hedge if the price goes back up? Absolutely. If you've gotten this far in your 4 pillars, you'll know that whenever we buy a stock, whether it's a hedge or not, we have 3 things every time. We have an entry point. So we bought this stock at a certain entry, right? We also had a target that if it hits a certain place, and then we also had an exit, right? And so in this case, our target would be, with a hedge, to mitigate the loss. But if it started going down, we wouldn't need it anymore, so we'd exit the trade and enjoy our time decay again. So that's an awesome question, is that, you can exit that hedge trade if the price, and what they're really saying is okay, I'm hedging this here, but what if the price starts to go back down here? Great, sell the stock, and now you're back in business with your time decay. Right? That's very intelligent question. Okay, very intelligent question. Okay, update about Delta Airlines. Delta Airlines. I'll just show you what I would do. I mean, you can't do this in real, but you can do it in your paper. I'll tell you what I would do with Delta Airlines. I mean, we're doing pretty well in Delta Airlines. Do you like that grist graph right there? There's an update on Delta Airlines. That's how we're doing. So Delta Airlines started out like this with a long put. where we were $265. Then we sold this and went to a short put and made it risk-free, right? Then we said, hey, why not speculate and buy some long puts? And we went here to where we had a small amount of risk. Then we said, gee, now the premiums are high. Let's sell some puts at, look at this, at $12. So if it falls down to $12, we get to buy Delta. Look how ridiculous that is. We got paid 95 cents times 100 shares is $95 times 5 contracts. We got paid $500 to sell Delta by Delta at $12. So the trade I would do if I were just starting right now would be that one. That's the one I would do right there. Is I'd say, yeah, pay me $475 to promise to buy Delta at 12, and if it goes down from there, I'm just a stock owner, and then I'd hedge from there. So that's the trade I would start with. If I came to the table and I missed all the opportunity to make something like that happen, I mean, and think about this, guys. This is really an extraordinary trade. $265 of risk when we go short with, or when we go with a put, buying one single put. Again, small position size, one single put. Once it starts going down, we sell one single put to take away our risk. Then we have a little bit of money to play with. We got $500. Great, let's take some of that $500 and let's buy some more puts. But this time we can go bigger position size because we've earned the money to do it. And now that we have the money to buy a lot of stock, boom, we make a promise to buy 5 shares. So you see the position size progression in that? So there's an update on Delta Airlines. How many want to get to that level someday? Get in the Mentor Club. Watch Noah Davidson do this stuff, right? This right here is like not normal, man. To take a $265 risk, eliminate it, then add 2 more trades and be up $6,000. That's like, I should do a video of that, just that whole sequence, so we have it forever, because that's flat out studly stuff. And what's cool is look at how much money I can lose in other positions now. You know, if I Delta hedge something or whatever. That's an update on Delta Airlines right there. There's an update on what we did with that one. Getting slowed down on Thinkorswim Spaker Chain because I'm having trouble. It wouldn't let me give you your whole question. So I want to know what you're having trouble with. Type in what you're having trouble with. I don't know what. Yeah, let me see if I got to find. Hang on. Let me see if I can find that question. Can you find that one, Corey? I've got thousands of questions.
I'll try and search it down. You got
hunt it down so we can see the other part of this. We got this cuts off.
You wouldn't believe how many questions are coming through. So just be patient with this. If we happen to overlook any, it's not intentional.
Yeah,
I assure you.
And my choice is I can not take questions or just do my best, right? With this amount. That's why the coaching's so valuable. Can you comment if Delta is negative? If Delta is okay, I'll ask everyone here. If Delta is negative, would you buy stock or sell stock to hedge? If Delta is negative, would you buy stock or sell stock? That's right, you'd buy. If Delta is positive, would you buy stock or sell stock to hedge? You'd sell. You got it. That's exactly right. Beautiful. Good job, you guys. How to make money if we have small positions? That's the same question here. So we got that one in there twice. Will we learn how to sell? Okay, will we learn how to sell off the trade? I think what you mean by that is exit the trade.
Exit, yep.
And how would I exit this trade? Well, I'd right-click and create a closing order, right? If I want to do it on the whole thing, the whole position, right? Let's say I want to get rid of Delta on the whole position. I have a choice here. I can do the whole thing or part of it or any part of the trade right here. So I just say closing order. Take out all of it or one at a time, whatever you want to do. You can get rid of part of it or all of it. There was a lot of trades in that Delta trade, so that's how you do that. Very simple. Can I barter in a credit trade paper trading? How do you barter? You really just shave the spread. So if I were to go in and say, you know, let's just find a stock that's not here, like Tesla. Okay, so here we have Tesla, and I say to myself, all right, let's do this here, and let's confirm and send and edit it. Now right here, see, I can mess with this natural right here, and I can say, well, 48, I don't want that. I want 49 or whatever, right? I'd want midpoint is what I'd want. So this bar is how you barter with that and shave that. And you'll notice, yeah, that works because this is a simulated account. So great question. Is there only way to have a Delta Monster out of control is because you have too big a position? It really is. It really, really is. If you have small position, well, let me put it to you this way. Let's look at our GLD trade, for example. Okay, $438. In fact, let's look at our EOG trade. Right? Okay, the most I can lose is $200, $223. That's like no matter what scenario you come up with, this stock could go up from 40 to 210. I only lose two. Look, this stock could go up from 40 to $2,000, and the most I can lose is $200. So that's really is true. Is the only way the Delta Monster gets big is if your position size is big, right? Right here, the worst I can do is a couple $100. Best I can do is 26. But that's a heck of a return. That's 10% on your. That's over 10% on your money, right? So if I were to do 10 of these. And then I got a $2,000 loss on that. I can stomach that. And if I delta hedge in here, I can stomach it even better. That's awesome. I have a lot to homework due on risk graphs. If you want to have some fun, we build these risk graphs over and over and over, don't we, Corey? In these classes. We build them all the time. And we do them by hand.
Every strategy, we go through the risk graph and actually build it by hand and show you how to do it for each strategy.
We start with this, just like I built that one today, and we plot those points. Every single trade we do that with. So the way to do that is practice with homework. How many paper trades do you do a week on? As many as you want to do. I tell my son this. My son is getting pretty good at the piano. He's taken it since he's 8, so he's 14 now, so it's that 6 years. And he chooses his own practice time because I find that if he chooses it, then he's happier. And so if he wants to practice 2 hours, then he's doing it because he wants to. And if he doesn't want to practice that day, that's his choice. Because here's an important thing to realize, guys. And you know what? This might be as important as anything I share with you today. So every once in a while I have little nuggets for you. Maybe this is a nugget that can help you. So just hold off on the 475,000 questions on Corey right now and just listen to Uncle Andy for a second, okay? This is such a great lesson. You have the process, and then you get the result. Now, if I were to go over to the local mall after the ban is lifted from coronavirus and there's people there again, and I just ran a poll, and I said, hello, kind sir, I'm doing a survey. Would you like to have more money in your life? Would you like to have more freedom in your life? And would you like to be able to leave a legacy for your children? The answer to that is yes to 100% of the respondents. And if someone came up to me and said, hey, Andy, would you like to have the body like a Greek god? Would you like to look like Corey Halladay? Would you like to have Corey Halladay's six-pack? Would you like to have Corey Halladay's biceps? I would say, yes, I would. But then they would say that there's a process, right, of going to the gym and practicing if you're going to do that type of stuff. And here's the real key. My wife is ridiculous in shape. I mean, you Google Marcy Tanner and you'll be like, are you serious? Andy's got a great life. Okay, I'm just telling you. She is a bodybuilding, insane, awesome. So Marcy just is like crazy in shape. But guess what? She has a love for this. She loves the gym. She loves the discipline. She loves the diet. She loves the protein shakes. She loves it. And she loves the process. And many people, this is so important, many people put a happy face over here, but a frowny face over here, and they say, well, this is pain, and this is gain, and if there's no pain, there's no gain. I disagree with that. I believe that you can have a happy face over here in learning the process, and it's all about how you look at your cup. Corey and I are not perfect trainers. I think we're better than average. I think we do better than most people at this. But we're not perfect. We're human beings. And as a student, you guys are pretty close to perfect, right? You're getting there. But here's the thing. You can look at this and you can look at what you don't learn, or you can look at what you do learn. And you say, you know what? I look forward to getting on the web with Corey and Andy. I look forward to Mentor Club. I look forward to another 4 Pillars session. I look forward to the day I'll be able to get in Ultimate Options. I look forward to that. And if you're looking forward and having fun, then if you just stay in this process, if you just stay in it and you stick with it, then all this really is here is time to head to this stuff, right? So how many papers should you do? No, it's not how many paper trades should you do. It's how many paper trades do I want to do? And that's a question to ask yourself more than a question to ask your coach. Hey, Andy, how many paper trades do I have to do? No, how many do you get to do? How many do you want to do? If you want to do 5 a week, that would be fantastic. What Corey and I usually do, it won't be in this one, but we have this for every single session of every single one, and we have this little sheet in the Ultimate Options. And obviously, there's a little bit more to learn about this than just delta hedging, right? There's a lot, how to draw a risk graph on each one, how to do all these other cool things besides delta hedging, how to do your fundamental analysis. So this is like the ultimate application of the 4 pillars, and I've got a worksheet here that has 6 for a week, 6 of them a week. So this is to practice delta hedging on 6 for that week. But a person could copy this and do more or do less. Who appreciates that lesson? Say, hey, I get that lesson. That's awesome. I love Deanna's attitude. That's a great table. Yeah, it's awesome stuff. So you get that. Okay, will we learn what ETFs to watch? Would you like to learn what ETFs to watch? Sector ETFs? Right here. So we have a watch list with all of them. And so watch what I can do here. Look at what I can do. I can put this on here and put this on here, and I can go SPY or XLF Financials, right? Or XLK Technology or XLE for energy or XLP. I can do any of these. USO for oil, up for the dollar, gold. So yeah, we watch all of them. You can watch whatever ones you want to. So that's how you learn to watch them. You just put them in your, watch list. Look how nice that worked out. It says watch list. So that was perfect question. It was a fantastic question. Except now I lost my my place. Here we go. How does one place a stop on an option? Will you watch? I think I cover that in 4 pillars, so I'll refer you to that if that's okay. It's the same way you put in a stop on a stock. It's the same way. Thank you for teaching me. Well, thank you for being here, and thank you for saying thank you. That thank you is a big deal. I've tried to teach my sons to do that, and I went to parent-teacher conference. My son's 14. He's in the 8th grade. Went to the junior high, and we took each teacher a little box of cookies to say thank you for teaching. And I get up there, and 6 out of the 7 wept when we came. The gym teacher held back, but he got misty. And every single one, I was so proud as a dad, every single one of those teachers wept, and they said, your son, when the bell rings to go to the next period, gets up, and instead of going to the door, he comes up to my desk, and he says exactly this phrase, thank you for teaching me today. And as a teacher, I appreciate that. So thank you so much. And thank all of you for your letters and your emails. It's heartwarming. Corey and I were talking yesterday about how much fun this group of people has been. Instead of delta hedging a vertical position, can you add a vertical and make it delta neutral? Yes, you can. Yep. Any graph that neutralizes it, you're already thinking ahead, which is beautiful. What that question means is you understand the big picture. That's beautiful. How do I make money using the covered calls? That is in the 4 pillars of investing. Again, that'd be a whole lesson. I'll tell you what, Corey, why don't we show them how to do a covered call next week? Would that be a good trade for next week?
Love it.
I love that one. How can you sell a stock you don't own? Boy, that's the $64,000 question. You borrow the stock, sell it, buy it back, and return it. And I have 5 classes right here that answers this question. If you go to the cash flow pillar, I think there's 4 segments. If you go to the cash flow pillar, there are 4 modules, because this is one of the hardest things for people to understand. There are 4 modules. How many? 4 modules that show 4 different examples of how you do that. Isn't that awesome? It's one of the biggest concepts that I can share with you. So go to that in the 4 pillars. That's all there. Getting down the home stretch. Do I factor the cost of buying the stock in loss? Yes, it does it automatically on the risk graph here. It does automatically. You make this so much simpler. Thank you, rules and stops. That's how you get out of emotion. Is the UK European or US? The UK is different than both. In the UK, if it's still the way I remember, I've taught over there a few times. The biggest difference between the US and the UK is that in the US, one contract equals 100 shares of stock. In the UK, one contract, wait for it, oh, that's leverage. 1,000 shares of stock equals 1,000 shares of stock. So much more leverage in the UK than US. But other than that, it works the same. Whoo! That was a list of questions that you guys got in. Fantastic job. Now, I'm going to ask one more question to you, everybody. Are you having fun and getting value for your education dollar? That is the most important thing. That you're having a good time and that you're getting value for your education dollar. Abso-freaking-lutely. I love that. Thank you. This is the best education ever. Axel. Oh, come on, Axel. I'm just giving you love, baby. Value. A big thank you. Boy, that's the best thing. So much value. Thank you. I hope this is as cool as college classes you took, like that physics that you took, and that geography that you took, I'll tell you what my favorite class in, let's see if people can guess this. What do you think my favorite class in high school was? Anyone want to take a guess? Basketball. Biology, math, exactly. Gym. I'll tell you what it was. It was zoology. And I'll tell you, there's a very important reason why I absolutely loved zoology. It's because I sat next to Wendy Jarvis. That's why, baby. When you're sitting by Wendy, Wendy. I don't know what happened to Wendy. I think she joined the Army or something. I don't know what she did, but yeah, I had the hots for Wendy Jarvis, dude. Bad. And what's funny is if you ask me one question about zoology, I couldn't answer one. I mean, I don't even remember the name of the teacher's name, okay? But I remember Wendy. Is Corey married to Wendy Jarvis? No, man. Corey's wife's way hotter than Wendy, man. Corey's wife, you know what Corey's wife went as Halloween as? Who was it again? I can't remember the Marvel.
Yeah, my wife's big into like the makeup artistry, and so she looked just like Harley Quinn. What's that actress's name in real life?
Margot
Robbie, and Robbie or something.
Dude, Margot Robbie's got nothing. She got nothing, okay? Bringing it. Superwoman. Yeah, wow. Harley's DC. Sorry, Rika. I didn't, got to get those right. Guys, we just love you. I get a little emotional. I wear my emotions on my sleeve. To have people learning these things and to be in an environment that's fun, simple, real, imperfect, but certainly a lot of fun, it just means the world to me. I think that, Corey and I, this is really what we were put on the earth to do, is to teach, because we absolutely love it. We look forward to it, and we'll see you guys. Next time, and we'll do covered calls next time.
What a great group! Thanks,
Fantastic
everyone.
Group.
See you next time.
All right, awesome.